not many people who will listen to this will probably end up doing an IPO, and they do seem increasingly rare at the moment, particularly in this.
They're back in fashion right now, though.
Yeah, well, tell us a bit more about that, because I think that's interesting. Not many people have done that.
Bit of a blur. It was hard work, and let's not underestimate it. And it was a US-listed IPO, so I can't talk on behalf of how it compares to a UK one. And there's competition, right? So, and more happening on that side of the pond than this side. That like with any transaction, you get a lot of guidance and help. So whether it's bankers, lawyers, accountants, you're going to be in the business during that process and after, and they're not. They're just there for the, to get you up onto the step, so to speak, and they take their fair cut of the deal. So there's a lot of similarities in that, is that you don't have to know everything. Like, I wasn't familiar with what the SEC does. I wasn't familiar with US accounting standards. So I had to bring on a US CFO off the back of that. So I'm used to recruiting, and I now know how to ask questions about US standards, but then use the audit partner for that as well in the US. So there was a huge amount of preparation to make sure we were match fit to be IPO. So that happens behind the scenes, and to an extent, there's similarities there, whether you're listing or not. Because it's a regulated exchange with different laws, we had a huge amount of yards to go. There's different audit standards, as an example. So we had to do 2 years worth of different audit standards. And then there's lots of similarities, the roadshows, etc. Pitching and making sure you're generating the right level of interest. And then because it was in the US and I was based in the UK, we did a physical roadshow. So being away from family for pretty much 40 odd days in entirety, going from state to state, city to city, doing lots of in-person meetings while still running a ship back in the UK. And it's a ski brand. So it's over the peak selling season, getting ready to do your purchase orders for the next. There were times when I'd go into my hotel room at night and literally just collapse on the bed and just go, I think my brain might explode, without exaggerating and being dramatic. But it's I don't think you can take any much more. And then the day you think that the process is very antiquated, because you could be getting all this interest, and to an extent this happens in private equity deals, but not probably as brutal as this. You only know whether you've got your order book value on the day that you've set. So let's say you're going live on the 1st of Feb and you're trying to raise 100 million. I'm exaggerating for effect. It was much smaller than that, but 100 million.
Yep.
You only know when you walk into the banker's office or on a Zoom call before the market closes, usually, so 3 p.m. Eastern, whether you've hit that number or not. And sadly, twice, we fell below the number we were trying to get to. And they look at it, they do this all day long, especially when there's lots of IPOs, and say, yeah, guys, you've kind of fallen short of the target. But hey, we've got a lot of interest. So what does that mean now? We have to do it all again? Well, yeah, we'll set a new date. We'll phone NYSE now, and we'll phone the SEC and let them know. And we're like, And behind the scenes, we're like, we need that cash flow as well. We're not doing this for the sake of it. We've got debts to replay. We've got things to finance. So the expectation is you've got there. So that, talking about suppressing feelings, I'm calm under pressure and go, right, guys, roll sleeves up. Let's just get this done. But I mean, you probably should burst out crying, and you don't. You suppress it and carry on. And thankfully, the third time out, we got there. And then you've got the PR to do off the back of it, because then you're meant to be, ringing bells and all that, and being on Fox News and whatnot. You're like, oh, really? And then you've got a business to run. So everything I just said is more than full time, and then you've got the other side. So I think it's another level of effort, sophistication, complexity versus, say, a private equity transaction. And the goal, I've not got huge private equity transaction experience. I've got several, but you set a date, but it's not a hard stop date. It's everyone's working towards that date. Yeah. And if you're ready, you go for it. But it's not down to this, okay, the order book's in, and no, back to square one, literally snakes and ladders, go back and build the order book. And now people second guess why the order book wasn't where it was. So then some of your institutional investors pull out. You're like, why? Nothing's changed. Well, there must be something. Nope. We just didn't fall short. So then you've got to rebuild a complete different order book. So I wouldn't put any, would I have signed up for this experience? No. Am I grateful for it? On balance, yes. I can now happily sit on the sidelines and advise people what to be prepared for, not ready to jump in. But you're right. And when we got off the back of it, it took me about a month or something to sit back and go, shit, I just IPO'd as a CEO of a business. I mean, I've never set myself kind of a big, hairy, audacious goal as a person of what to do, but would that have been on it? Maybe, and you've just done it. So yeah, it was, but there's no time to stop and celebrate it. It's like, right now, go and drive the business and utilize the funds properly. So.
Quick message from me today. If you are a CFO, CEO, investor, or talent leader that would be interested in appearing on the Stoics podcast, please drop me an email on the address below.